In your markets news now, Asian markets closed in positive territory at the close of the trading week. The Japanese yen rose after the Bank of Japan's governor indicated that the central bank was still on a path to raising interest rates there. As with all global market participants, Asian players will be listening out to hear the Fed Reserve Chair's comments at Jackson Hole later today. The Nikkei share average ended up 0.4%. The Hang Seng Index rose by 0.16%, while the Shanghai Composite Index closed up 0.2%. Over in the United States, stocks ended in the red yesterday as investors paused ahead of Fed Chair Jerome Powell's speech at the Jackson Hole Economic Symposium, attended by central bank governors from around the world. The Dow Jones Industrial Average declined by 0.4%. The S&P 500 shed 0.9%, its worst decline in nearly 3 weeks, while the Nasdaq Composite Index lost 1.7%. Locally, the JSE is mostly in the green, with the all-share index 0.6% stronger. The rand is trading at 17.93 against the US dollar, 23.54 against the British pound, and 19.94 vis-a-vis the euro. Gold is trading at around $2,500 and platinum at $953 per ounce, while the price of Brent crude oil is trading at $77.09 a barrel. Well, to unpack the markets for us, I'm joined by Patrick Matiti. He's the head of multi-assets at Aluwani Capital Partners. Thank you so much, Patrick, for joining us. So all eyes will be on Fed Chair Jerome Powell as he makes his Jackson Hole speech today. But why is it so important, given the fact that the recently released Fed minutes pretty much suggest that a rate cut is imminent?
Good afternoon, Nana, and thanks for having me. Indeed, the minutes do indicate the path towards rate cuts are now being firm. So the markets are indeed looking forward to the first cut coming through in the meeting in September. I think the bigger question here is the quantum. So we did see a few economic data which suggest that perhaps the economic situation in the US is slowing down a lot quicker than people anticipated, hence recession fears. So it'll be interesting to get a sense from the Fed chair when he addresses its counterparts as to where he sees U.S. growth over the next few months or so, or quarters, and also the path towards normalizing of interest rates. And I think the important part of that speech will then set the tone for what those central bankers will go back and do, back in their economies and back in their fields. Because as we all know, the U.S. tends to set the tone with the rest of us are following. And so it'll be interesting, therefore, for the U.S. to see from the Fed's perspective, where they see growth, especially, and therefore for the rest of us that we can take the cue and see what we can do within our domestic economies.
Yeah. So as South Africans, why should we care, what the Fed Reserve is deciding to do? How does that impact on us?
It's very important because, first of all, our economies are interlinked. So we don't operate in isolation. The flow of funds, especially capital, grows to where it can get the best returns. So investors are looking for areas where there's growth, and interest rates being low, that is supporting growth. And so you should care from that perspective. But for the average person, you do want an environment that attracts flows or capital, because it then improves your currency, the rand exchange against the dollar. And because we import a lot of stuff from other countries, a stronger rand then means that the prospects of lower inflation are a lot more positive, which then means we can have lower interest rates, which means that the cost of borrowing funds is low, which means a lot more affordability in terms of those with existing debt, but also it means a lot more in your pocket that you can spend on other things.
So when you reflect on the month of August so far, how would you say that the local market has fared? And presumably there's still a lot of value to be had in our market, particularly as there is an expectation that we're going to start experiencing interest rate cuts.
Yeah, so the markets have run quite hard. If you look at, and especially after the GNU, the month of July, and now flowing on to August, I think the month of August, the main drivers have been global. with the local factors having played out in the month of July. So we do anticipate that the market will continue to be strong. Yes, there will be blips along the way, but I think the path is what it is towards a stronger and therefore higher for longer. And that is all because both domestically and globally, we do anticipate rates to start coming down, which is ultimately good for corporate earnings and therefore good for investors.
So Goldfields, which has mining operations in a number of countries, including South Africa, they came out with their half-year results, reporting a profit, albeit at a slower pace than the year before. That's interesting, given that the gold price has been having a spectacular run of late. Your thoughts on this particular stock?
Yeah, so the results are actually disappointing. So as you point out, despite a very strong gold price, I think it's about 14% year to date. If you look at the production side of Goldfields results, that's where they've disappointed because they've managed to get a lot less off the ground than what they had promised. And also looking forward, they still indicate that they are unlikely, to meet the production targets that they promised the market, and hence the stock is down about 6.5%. A lot of that also has to do with Chile, which is one of their new acquisitions, where they are struggling to get stuff out of the ground, but also the costs are actually running way ahead of themselves. So there is also a cost control challenge that they face, when you look at some of the inputs.
Patrick, thank you so much for your insights there. Have a great weekend. That was Patrick Matidi. He's the head of multi-assets at Aluwani Capital Partners.